Good evening, traders. As we wrap up today's session, we're looking at a cautious Fed, oil's uncertain outlook, and gold's evolving role in the global markets. While the Fed held rates steady, economic uncertainty is building. Oil markets navigating OPEC production shifts and trade tensions, while gold's surge reflects deeper shifts in investor sentiment. Let's dive deeper and look at what's driving the markets. The Federal Reserve held rates steady as expected, but Chairman Powell emphasized patience, saying the Fed won't rush into rate cuts without clear data. While the market was hoping for more dovish hints, the Fed remains in a wait-and-see mode. Despite holding rates, GDP and core PCE forecasts came in stronger than expected, with core inflation projected above 2.5% and unemployment expected to rise to 4.6%. Slower immigration could ease labor supply constraints, but job demand remains the key factor for economic stability. Looking ahead, we still expect the Fed to cut rates by 75 basis points this year, likely in July, September, and December, but with growth risks and inflation pressures lingering into 2026, the Fed may hold after that. Oil prices remain in a tricky spot heading into 2025, while OPEC plans to gradually increase output from April 2025 to September 2026. They may delay that plan if prices remain weak. On the demand side, global GDP growth is expected at 2.8%, but rising trade tensions could shave off about 0.5%, potentially cutting down oil demand by 400,000 barrels per day and lowering Brent crude prices by $3 to $5 per barrel. Non-OPEC supply is set to rise by 1.4 million barrels per day, outpacing demand growth of just 1.1 million. If that happens, OPEC will have a tough time balancing the market, which could keep oil prices under pressure for much of the year. Gold continues to rise, but it's no longer just about safe haven demand. Investors aren't abandoning the US dollar, but they are diversifying into alternative assets, and gold is at the center of that shift. Institutions, households, and sovereign wealth funds are increasing gold allocations alongside growing institutional acceptance of cryptocurrencies. This signals a broader trend, the search for stability beyond traditional markets. Despite the Fed's stance on interest rates and a relatively strong dollar, gold's continued rally suggests that investors see long-term value in holding hard assets, a trend that goes beyond short-term inflation fears or geopolitical risks. So what's the bigger picture? The Fed staying cautious, oil markets remain fragile, and gold is becoming a key part of broader diversification trend. As we head into the next trading sessions, keep an eye on Fed rate expectations, OPEC supply adjustments, and how investors continue to balance risk in this evolving market landscape. That's it for today's evening market outlook. Stay sharp, manage your risk, and I'll see you in the markets.